What prompted RBI to go ahead with this, with the takeover? What prompted SBI to take over the Yes Bank board? Can you be slightly more descriptive and what has changed and what has prompted this kind of a regulatory action?
See, Nikunj, at the outset, I must say that there is no need to panic at all. The bank, Yes Bank, has been under supervision. There were discussions going on for last several months between Reserve Bank of India and the Yes Bank. And as yesterday in its press release, RBI has made it absolutely clear that we are trying to discuss issues further, and we are trying to see that the institution of Yes Bank is stabilized further. Though it has been seeing the downgrades, it has been seeing the triggering of and invocation of bond covenants. But it is important here now to see that Reserve Bank and the other institutions that have been brought in, particularly SBI and LIC, as you very rightly mentioned. I think it is time to see that the institutions go forward with greater resilience and greater stability. The investors' confidence within Yes Bank has been dwindling, as we have seen in the past. RBI was trying to bring in and get some capital infused, but somehow the investors who were linked with these discussions with Yes Bank management could not bring in the confidence and desired results from the bank. So as a result, RBI was forced to see change in management. The current establishment within Yes Bank could not provide the confidence and could not get the capital that was required in the bank, given, as I said earlier, the continuous downgrade of the Yes Bank. So this action, in my view, should have been there, but since Yes Bank was giving impressions to the Reserve Bank that they were in conversation, they were getting some sort of possibility of stock exchange interventions and bring in some capital. As we see, nothing moved in these months, and somehow the downgrades could not be stopped. So as a result, Reserve Bank was prompted to act, and I think this is part of a continued new policy that Reserve Bank has taken in. Enough capital support and other measures have been taken to strengthen banking architecture, but on supervision and on compliance, the governor has shown clearly zero tolerance, and that I think is very clearly evident in the action that RBI has taken.
Thank you for explaining it briefly and explicitly, Mr. Chaturvedi. Parallels are being drawn between what happened to PMC deposit holder versus Yes Bank shareholders. On my Twitter account, on our social media accounts, we are getting calls from deposit holders who are panicking about their deposits in Yes Bank. What should they get worried, and how safe is their money?
No, as already the press release and subsequent appointment of the people from SBI of Mr. Prashant Kumar, the ex-CFO of the Bank of India, is clear that professionalism and ability to bring in the prowess of knowledge is a clear way forward, and that I think should assure market and investors that things are going to be stable, and very soon they're going to take over the mega functioning of the bank. So I think this should give assurance to all investors and also depositors, and in this case the engagement, as I explained to you earlier, has been long. The action hasn't suddenly happened. It is not something that has been detected a day before and action has been taken the next day. It's not like that. For last 6 months or even more than that, RBI has been in touch with them. There were public reports about it, and and I think the move now is a well considered move, and lot of nudging was done even before this action came in. So I think it is absolutely professional action that should bring in confidence all across.
Your assessment, how big is the hole in Yes Bank's balance sheet and what is the immediate capital requirement which is required before 31st of March for Yes Bank to stay afloat?
Now that it has been taken over, probably some time would be required to, I think, assess the precise numbers. At this stage, to comment on that probably would be too early. But let's see. I hope very soon we would come to know of this. But now that the control has been shifted from Yes Bank management to a more professionally drawn team, these numbers would not be very difficult to find out, and I'm sure they would bring in. But the idea would be to have regular sort of a flow of liquidity and proper functioning, so that the depositors are in a way not adversely affected, and that I think is Reserve Bank of India's top priority at this stage.
Mr. Chaturvedi, markets are viewing this as a bailout for the depositor and not for the minority shareholder, because in this process the minority shareholder of Yes Bank will get marginalized and the bondholder of Yes Bank, institutional investors, they will be left with nothing.
No, the idea, Nikunj, is very clear that the effort would be to have a credible revival plan, bringing in all that are on the board, majority or minority. So that has been very clearly emphasized by RBI yesterday. So I do not see any reason to get worried on that count. And I think given the fact that Ministry of Finance and RBI both are on the same page in this context, as RBI had taken views of the Finance Ministry on this earlier, I think it is clear that all are on the same page, and this is going to be extremely important in terms of how we are looking at the idea of this credible revival plan. And RBI also made it clear that the bank was facing regular outflow of liquidity. So the fact that bank was trying to bring in issues which are of key significance, I think was absolutely clear.
I hope you'll appreciate my next question, Mr. Chaturvedi, but Reserve Bank of India representative was there on the board of Yes Bank, and also RBI a couple of months ago had given Yes Bank a clean chit. So how did these things miss RBI's attention, and how come the board member of RBI representative was not able to communicate this earlier?
No, I don't think if we should construe that as a clean chit. There were directions issued to the bank right in the first place itself, and those directions, as I said, have been on for 6 months, and that's the basis on which I'm saying that we need not panic, because RBI had done whatever was in its purview to nudge the management of the Yes Bank. So directions were issued to them. There was no clean chit per se. There have been this process of engagement with them. Yes Bank management could have been more professional, but somehow they haven't delivered what they have been promising all this while. And this has been made clear by the Reserve Bank yesterday. So I do not think if that should be the basis to say that RBI has suddenly detected this. No, the bank was, I think, in explicit sort of understanding with the Yes Bank management to ensure revival, and the Yes Bank management also informed RBI that they were trying to raise resources from private equity firms. They were trying to explore opportunities with them for infusing more capital, and they even gave in the filings that were there at stock exchanges that as late as 12th February 2020. So I do not see any reason why RBI should have intervened at that stage. The fundamental bottom line for the bank is that the revival plan should basically be a preferred option when the banks themselves lead their action. In this case, the assurance by the Yes Bank management was something that the RBI believed, and there were credible reasons for that, because RBI, I think, was also in touch with those companies, investors who were being quoted, but somehow they did not feel assured and did not infuse any capital, as I said. So it was on 12th February. When that plan failed, then the bank got into action, and we heard what was out. So due process has been followed. Professional sort of advices were there, and when they have failed, now the RBI and the government have got together for this action, and as I said, it is under professional team now, and they are seeing. So no need to panic or think of a collapse. This is something which I hope would be managed very well in the days to come.
We're trying to get the same message out, Mr. Chaturvedi, that no need to panic and depositors are safe. That's a primary objective as member of press and as a media channel, to bring that message out. So I think we are doing that. My next question purely, sir, is there are two options which could be possible. One is that a consortium comes in and injects equity. Second is Yes Bank should be merged with SBI. Are both these options considered right now?
I think merger is too early to say, but definitely some sort of mentoring is required, and that mentoring would bring in greater details in terms of how the professionalism is required. It's very clear from the performance and from the balance sheets which are there in public domain that Yes Bank did not follow the approach that the bank should have followed. Now, with this new mentoring process that has been placed there, I think we would see the results very soon. Nikunj, I would have to leave now, but thanks for inviting me.
Vidyan, thank you for patiently asking all our questions. Well, that's Mr. Sachin Chaturvedi, board member of RBI. First thing first, for deposit shareholders, deposit is safe. Second, Reserve Bank of India was in constant touch with Yes Bank. Yes Bank kept on indicating, promising, sharing, expressing that they would be able to raise capital, but they failed to do so. Third, merger is not something what is being considered right now. Yes, there is a talk within consortium, and the consortium is likely to be increasing, is looking at a capital infusion. That is a possibility. However, RBI feels that the bank will be able to find, or they will be able to find a resolution very, very soon. So from a market standpoint, looks like resolution should be in place, but from a depositor standpoint, which is the message which we are trying to bring out, your money is safe, and that you've heard from not just anybody. It's not a WhatsApp rumor, it is not somebody's interpretation, it is a comment from RBI board member that the depositors of Yes Bank, the deposit or the money of a Yes Bank depositor is safe. So that's the breaking news for us, and I'm going to take a break with this mega exclusive that as of now RBI feels that merger is not the first option they want to consider.